How we getting on, folks? Luke here from LAGFX. We are back today with a new case study video. We've not done a case study in a while, so I thought, why not do a case study on XAU USD? Now, the reason for my choice of this market is pretty much down to a poll that I put out on the Learning Lounge group chat. It was the most demanding market to be analysed for this case study video, hence why I am reviewing the gold market. Now, if you guys do go on to enjoy this video, you learn a thing or two, as always, don't forget to leave the video a thumbs up, share it with your friends and family. And if you have any questions or queries with regards to the analysis that I do go through today, then please leave them in the comments below. More than happy to answer any questions that you may have. And if you need a video making specifically on a certain topic or something I mention within the video, then again, leave a comment below and I can make a video based on what it is that you are looking for me to do. Now, throughout this video, what I'm going to do is pop up some fundamental news that is quite related to the XAU US dollar market. I'm also going to highlight some key points about this market fundamentally. So the fact that we've set new highs, what it means for us. And I'm also going to run by some of the things that have happened as of recently, which has caused the market to act out the way it has done. If you guys have watched a case study of mine before, then you'll know that we always start on the highest of time frames. So here we are in the 3 months. You can see here that this market is putting in clear bullish structure. We have 2 consecutive higher highs and we have 2 consecutive higher lows. Okay, so this being the first low, this being the second higher low, and then we have a high followed by a higher high. So we have 2 consecutive highs and lows. The second high and low being higher than the previous ones. So what does this tell us? Well, this tells us that this market is clearly bullish. This gives us our bias. So if the market is a bullish one, then evidently we want to be trading this market in a bullish way. We want to be buying into this market. We don't want to be shorting against the majority traders. Now, precious metals like gold and silver are always going to hold value regardless. Most currencies were backed on gold once upon a time. Now, obviously, currencies are backed on the US dollar, but in this scenario, the gold market is against the US dollar. So there are some discrepancies, and obviously we see fluctuations in this market based on whether the US dollar is depreciating, appreciating, or whether we have news with regards to the supply and demand for gold itself. But as a whole, this is a market that is always going to be, in my eyes, trading in a bullish way. But it doesn't mean to say that this market doesn't need to trade lower to correct itself in order for institutions, central banks, people like me and you to buy into this market at a better price. So, as I say, we look at 3 monthly timeframes, we can see that it's clearly bullish. This gives us the bias to buy into this market. We just need to find areas of demand. Why do we find areas of demand to buy into a bullish market? Well, that's because price pulls down and into areas of demand. Once demand is introduced into a market, we usually see a balance or a flip in the balance from being short to go long. When we see a market trading lower, it's because supply is overpowering the demand in the market. But then when we see price trade into a demand zone, 2 things happen. Either price absorbs that zone and continues to trade lower, which means that there is still more supply in the market than there is demand, or we see a reversal take place from these key areas. And that's because the supply and demand balance has now flipped. What I've gone ahead and done is marked out an area here for you all on the weekly time frames. If I just pull this back ever so slightly, you can see that what I've highlighted is a wick to the upside followed by a wick to the downside. Now, the reason why I've done this is because this suggests that there are sell orders sat here that have been left unmitigated. So we need to see price trade down to clear this, to mitigate those orders. Now, by price trading lower and down and into this zone, a few things happen. All the sell orders that have been introduced in order to encourage price to trade down and into this area, they are removed from the market once price trades down. Any sell orders that have been sat waiting here, they are also removed from the market. And then what also happens is demand is introduced. So buy orders, pending orders that are waiting here, are then introduced into the market, which is why we see such hawkish moves to the upside when price trades into certain demand zones. Now, this is also a fair value gap on the 3-month timeframes. Again, another good reason to mark this out as an area of interest. So I would love to see price traders down and into the 2230 region. It's just a matter of if and when. And obviously we need to wait for the right confirmation in order to get introduced into this market. Now, there are a few things that are worth mentioning just before we continue to dive deep into this market and look for, more fractal opportunities and ways at which that we can take advantage of the moves that are happening at the moment. So gold has recently topped a new high of 2,451. So the price of gold and silver actually rose on Tuesday, with gold reaching a new record high, hitting the 2,451 mark as appetite for safe haven assets strengthened following the recent comments by the Federal Reserve officials. Now, a few days ago, Jerome Powell stressed that the central bank will not wait until inflation hits 2% before cutting rates after the latest data showed cooler than expected inflation print. Adding to the bullish sentiment, the CME FedWatch tool showed that traders are 100% certain that the Federal Reserve will lower interest rates by September. So the probability of a 0.25 percentage point cut stands at 93.3%-ish, while there is a 6.7% chance of 0.5 percentage point reduction. So with that being said, spot gold surged 1.23% to go for that $2,452 per ounce at about 11 o'clock in the morning, Eastern Standard Time. Silver also gained 1.2% to sell for around $31 per ounce at the same time. So you can see that talks on inflation have a massive impact on the likes of our precious metals. Hence why we've seen such an increase in the value of gold as of recently. 1.2% is crazy. So moving on anyway, I don't want to talk too much about fundamentals. I want to focus on my technical analysis. Obviously, we'll pick back up with some other fundamentals as we go on. We can see here, going down to the daily timeframes, we are still yet to be delivered with clear instructions that this market is trading us in a bearish way, especially after recent fundamentals. We've seen this large move up since the Tuesday. What we have seen here is 3 consecutive days as of recently of bearishness. So price has decreased over the last 3 or 4 days. Now this decline here that's taken place over the course of the last few days, this is after the Federal Reserve officials such as Mary Daly of San Francisco and Thomas Barkin of Richmond warned that inflation was still not near its target of 2%. Previous to the information we got earlier on in the week, we've then had more news, but from Mary Daly and Thomas Barkin, suggesting that we're still not near the target of 2%, leaving investors uncertain of the bank's next steps on interest rates. So that caused and has caused gold to decrease by 1.5%. This conflict of interest in fundamental news is causing investors, causing the likes of ourselves, to be uncertain on what's going to happen in terms of next steps for interest rates, which obviously is going to fluctuate the value of our precious metals, as the US dollar is quote currency to this. So as we go down to the 4-hour time frame, you can see here I've marked out a break of structure. It's not so visible in the 4 hours, but as we go down to the 1 hours, you can see that we have actually been delivered with a 1 hour break in structure. Now this suggests to me that price is actually looking to go short. The supply and demand balance is in favor now of supply. Demand is clearly being removed due to this uncertainty, and supply is being introduced due to this uncertainty. A lot of people are maybe selling their gold assets or are selling this market based on the information we have been given from Mary Daly and Thomas Barkin. So just to kind of continue with the analysis, I've gone ahead and marked out 2 areas of interest here because ultimately we have been delivered with a break of structure. A break of structure to the downside. So that suggests to me that we are no longer following the laws of bullishness, which is to protect the lows and break the highs. We are now following the laws of bearishness, which is to break the lows and protect the highs. You can see here that we are starting to protect these highs that have been set in the market. They're yet to be broken. So we are following the laws of bearishness at the moment, on top of the fact that we've had this break in structure, which is a significant piece of evidence to suggest so, on top of the fact that we've had this uncertainty with the news as of recent, with Mary and Thomas warning us about inflation. So there's so many things that are suggesting price could be trading us lower. Now, how would I look to tackle this market and how would I look to get involved in this market? Well, we can expect that price may come to pull back after trading into this area of demand. Some demand may be introduced, but it may not be enough to cause price to trade above these highs here, because there is a lot of supply waiting within this area, and there's also a lot of supply waiting within these 2 areas here. So I would suspect that price may continue to trade up. It may absorb the first zone, but what we want to see ultimately is for price to trade up and into one of 2 areas of interest, break structure again to the downside. That suggests that this corrective wave here has finished and a new bearish leg is ready to take place, trading us lower. Now, where would we look to get involved? Well, we would look to get involved as soon as price has traded into a zone and broken structure. Once we have that break of structure after the penetration of a supply zone, that confirms to us enough supply has been introduced to flip the S&D balance and put an end to this corrective wave. So I would ultimately be looking to go short from somewhere like this. I would simply wait for price to break that structure as it has done here, and I'd wait for price to pull back initially to trade into a fractal area of supply before I look to take this market short. I'd then be riding this market all the way down and into my area of interest down here. This could generate us with a 1 to 57 risk to reward ratio. Now you may be thinking, Luke, you're crazy. You can't place positions like that. It's just impossible. It's definitely doable because I've done it before. There are many videos out there where I've got from start to finish proof of placing positions just like this, with profit sheets, before and after analysis, as well as a full breakdown on why I placed the position. So trades like this are definitely doable, and I think this is something that we could take advantage of over the course of the next few months. We just need to be sure and be ready that this move is in order to actually take place. Another thing to back this analysis, if we just get the brush tool out again, change the color this time, you can see that we have our low here. We have the high that's been created. We have the break in structure. Price pulls back to set a lower high. We follow with a lower low. This is clear bearish structure. We have a high set, a lower high, low set, lower low. These are the laws of bearish structure. So this again backs our evidence and probability of this actually taking place and us being able to place a profitable position in the market. Now again, to further back this analysis, you may be thinking, oh, well, Luke, if the market is going to trade us bearish for that amount of time, are we not going to be contradicting our higher time frame bias and our higher time frame analysis that this market is a bullish one? Absolutely not. Within every bullish market, we have corrective waves. This is simply a higher time frame corrective wave. So if we just zoom back in here now, just move this up a little bit just so we can see data. If we just mark this out again, so we have our high set, low set, and we continue to see price trading down like so. What we will then be delivered with once price trades into this area of demand is a break of structure to the upside. Price will pull back and then continue to soar higher, creating new highs to the upside. Okay. Now, when we zoom out and we look at this market, going to I suppose we could stay on this time frame. We are still following the laws of bullish structure. And the reason why is if we just change this again to, we'll change it to yellow. You can see here we have a low set followed by a high, followed by a higher low, followed by a higher high. So we are still following the laws of bullish structure, whilst we are still following the laws of bearish structure within this corrective wave. So this is why it is so important that we complete a full top-down analysis and we ensure that our analysis correlates with itself as we go down and down and down on the timeframes. And our analysis does. Everything backs up. Everything is playing out as it should do. We just need to wait for price to give us the confirmation in order to actually take part in this market. So that's kind of a rundown on the XAU USD for myself. As I say, there is a lot of information out there at the moment that is contradicting itself. However, I'm just looking at my technical analysis and going based off some of the fundamentals that I've looked at. So just to round up this case study video, what I want you guys to do is mark out these areas. I'm just going to get rid of these squiggly lines, but mark out these areas as areas of interest to potentially go short in. And if price does absorb these areas, then fair enough, we should look to go long. It's very important that we wait for confirmation before we enter in any positions. I can't stress that enough. But if we are delivered with a confirmation to enter in on shorts from these two areas, I'd be looking to take profit around the 229 area. And from there, I'd be preparing to either go long or looking for further shorts depending on how price reacts from this area of demand. But this is actually going to summarize this case study video. It'll be interesting to see how many of you believe this market is going to continue to trade us higher and how many of you believe this market is going to take us lower for over the course of the next few months. But as I say, this is going to summarize this case study video. I hope you guys have enjoyed. I've tried to implement some fundamental analysis there and mention some points about inflation and Jerome Powell and Mary Daly and Thomas Barkin as well of Richmond. So it's not just technical analysis in this video. There has been some fundamentals that have come into play. We've just actually had recent news that Biden is dropping out the presidential race, which is absolutely crazy. So that's probably going to stir things up with the gold market as well. Now, just to be more direct and give more information, on Sunday, so Sunday the 21st, Joe Biden actually announced that he no longer plans to run for president in the 2024 elections. This is what he said personally. It's been an honor of my life to serve as your president, and while it has been my intention to seek re-election, I believe it is in the best interest of my party and the country for me to stand down and to focus solely on fulfilling my duties as president for the remainder of my term. That's what he shared in his statement. Biden will address the nation sometime next week to elaborate further on his decision. And to conclude, he thanked Vice President Kamala Harris and the American people for their support. He is yet to endorse a candidate who could potentially take his place. I think this just speaks volume. But yeah, I just wanted to leave you all with that. As I say, I hope you guys have enjoyed this analysis. I hope you've learned a thing or two, maybe giving you some clarity with my thoughts on this market and how I seek to take advantage of it over the course of the next few weeks. If you have any questions, as always, leave them in the comments below. And if you did enjoy the video, don't forget to leave it a thumbs up. With all that being said, people, thank you very much for watching, and I'll catch you all in the next case study video.